Welcome to the deep dive. We're here to cut through the noise and get straight to the essential insights. And today, we're diving into something truly huge. Generative AI. Look, this isn't just another buzzword, not even just another tech trend. We think we're witnessing a fundamental economic shift here. Something as big as, say, the internet itself, or maybe the rise of cloud computing. So this deep dive is really for you, the curious learner, who wants to get past the hype, understand the real power players, the dynamics, and frankly, where this multi-trillion-dollar layer of the global economy is actually heading. I mean, the investment numbers are just staggering. We're talking over $44 billion poured into AI startups in just the first half of 2025. And projections. They're saying maybe $200 billion by the end of the year. So our mission today is to unpack what we're calling the 2025 Generative AI Power Matrix. We'll break down this pretty complex ecosystem into three main tiers. We'll explore who really holds the power, where the money's flowing, and maybe what risks are looking just beneath the surface.
By the end, you should walk away with a clearer framework, a way to understand the opportunities, the potential pitfalls, and the specific companies really driving things. Okay, so let's unpack this. Let's imagine you're building a brand new city, right from scratch. Before you even think about buildings, you need the basics, right? The land, the roads, the huge power plants to make it all work. Well, that's kind of our first tier, the infrastructure titans. These are the massive, hyperscale public companies that basically own the picks and shovels. They control the railroads of this whole AI revolution.
Yeah, and what's really fascinating, I think, is just how deeply embedded these companies already are. Their market dominance, the immense capital they command, and their existing integration into enterprises. It's not just an advantage, it creates these really formidable, defensible moats around them. These players are almost by default the primary beneficiaries of this huge infrastructure build-out. It almost doesn't matter how specific AI apps perform down the line. They're selling the shovels in this gold rush.
Right, selling the shovels. And when you talk about those shovels, one name just jumps out immediately. NVIDIA. They seem to be the undisputed kingmaker here, powering so much of this. What makes them so dominant?
Oh, absolutely. NVIDIA has something like an estimated 92% market share of the high-performance GPUs. Those are essential for training and running these huge language models. But it's way more than just the hardware. NVIDIA's really evolved into a full-stack kind of AI factory provider. They offer this whole integrated ecosystem. And their proprietary CUDA software platform, that's been developed over 2 decades. It's a really deep defensible moat.
CDA, right.
Yeah, think of CUDA as like the standard operating system for AI development. It makes it incredibly difficult and expensive for developers to switch to other hardware.
Great switching costs.
Huge switching costs. So it's not just a product, it's become the standard. Their market cap is, what, over $4.2 trillion now? And their data center segment alone is nearly 90% of their sales. Plus, their new Blackwell architecture, which offers something like a 25-fold improvement in cost effectiveness. That means developers can run much, much bigger models or get the same results with way less capital. It's just accelerating everything.
That level of dominance is incredible. But, with such a strong lock on both hardware and software, are there any challenges, any potential disruptors NVIDIA might face down the road? Especially with rivals like Google developing their own custom chips.
That's a fair point. I mean, their moat is deep, no question. But sustained competition in custom silicon, especially from the other hyperscalers themselves, that's definitely a long-term threat. NVIDIA's challenge is really to keep innovating at this incredible pace and to keep that CUDA ecosystem so compelling that developers stick with it, even if other hardware options pop up.
Okay, so NVIDIA provides the raw power. Then you have Microsoft stepping in as maybe the enterprise AI powerhouse. How are they leveraging their vast existing empire for AI? And what about that strategic relationship with OpenAI?
Microsoft's play has been brilliant, really. They're leveraging their huge global distribution channels, and absolutely, that critical partnership with OpenAI is pivotal. Microsoft Copilot, which is now deeply integrated into Microsoft 365, Azure, Windows.
It's everywhere.
Pretty much everywhere. Combined with ChatGPT, that partnership commands something like 74.2% of the consumer chatbot market. Their strategy isn't really about selling AI as a standalone thing. It's about embedding it within the tools businesses already use every day.
Makes sense.
And it's working. Azure cloud revenue surged 39% in Q2 2025, mostly driven by AI services. And their monetization model is powerful too. $30 per user per month for the Microsoft 365 Copilot. That's a recurring, highly profitable stream from customers they already have. Plus, they hold over 18,000 AI-related patents. That's the most among their hyperscaler peers, showing a real long-term R&D commitment.
Okay, then there's Alphabet, Google, It kind of feels like the sleeping giant that's now, well, wide awake in AI. How does their long history of research, like with DeepMind, translate into their specific role here?
Well, Google definitely has years of pioneering AI research under its belt with DeepMind, and now they're really pushing hard to commercialize it. Their Gemini models are right at the forefront, and features like AI overviews and AI mode in Google Search, they're already driving, they say, over 10% more queries.
Interesting.
Yeah, and Google Cloud Platform GCP saw revenue up 32% year over year in Q2 2025, largely fueled by their Vertex AI platform. What's really crucial for them is their custom silicon, the TPU's tensor processing
Right,
units.
their own chips.
Exactly. Chips specifically designed for AI tasks. They combine that with a multi-cloud strategy. So they're not just pushing their own models, they're also hosting others like Anthropic, even OpenAI sometimes. That flexibility plus their internal research power, it's a potent mix.
A very integrated approach. Okay, let's shift to Amazon, the pragmatic cloud king, as you called them. Their strategy feels a bit different, maybe more focused on offering choice. What's the thinking there?
You're right. It is distinctly pragmatic, very customer-centric. Amazon Web Services, AWS, is still the global cloud leader, about 30% market share. But instead of pushing one single proprietary AI solution, their platform, Amazon Bedrock, offers a choice. You can use foundation models from various providers, Anthropic, Mistral AI, plus their own Amazon Nova models.
Like a marketplace.
Exactly. It positions AWS as this neutral, flexible marketplace for AI. Their main moat isn't necessarily just the AI models themselves. It's their incredibly entrenched position as the default cloud provider for millions of businesses. And they're investing heavily, too, committing something like $118 billion in CapEx for 2025, a 43% jump, mostly for AI data centers, shows they're serious about providing that underlying infrastructure.
Okay, and rounding out Tier 1, we have Meta Platforms. They seem to be playing a really interesting dual role. You've got their core advertising business, but also this big push into open source AI. How does that strategy work together?
Yeah, Meta's generative AI strategy is definitely two-pronged. First, they're absolutely using AI to boost their core advertising business, and it's working incredibly well, a 22% year-over-year ad revenue jump in Q2 2025. That shows AI's immediate bottom-line impact for them. Second, they are aggressively championing open-source AI with their Llama family of models. Now, this isn't just, about being nice. It's a strategic move. It could potentially commoditize the foundation model layer itself, disrupting competitors who rely on closed-source models by making powerful alternatives widely accessible.
Undercutting them, potentially.
Potentially, yes. Yeah. And don't forget their data set. Data from 3.48 billion daily active users across Facebook, Instagram, WhatsApp. That's an unparalleled resource for training and refining models. It creates this continuous feedback loop, a really strong competitive advantage.
Okay, so that's the foundational layer, the infrastructure titans. Let's move up a level now to Tier 2, the innovation engine. This seems to be where the core AI models are actually being built. A high-stakes race fueled by huge ambition and lots of venture capital.
Absolutely. This tier is where you see incredible technological prowess, really pushing the boundaries of what AI can achieve. But, and this is a big but, these companies also face some pretty existential questions. Things like defensible moats, how sustainable they are, the staggering amount of cash they burn through.
Right, the cash burn must be enormous.
Huge. And then there's the looming threat that the underlying models themselves could become commodities. Their valuations have absolutely soared, reflecting this huge belief in their potential, but they are all still privately held, which tells you something about the high-risk, high-reward nature of this particular segment.
And right at the top of that list, you've got OpenAI, the incumbent, the trailblazer, the ones who really kicked off this whole current wave with ChatGPT. They have incredible brand recognition, but what are the implications of that deep alignment with Microsoft?
Undeniably the trailblazer, creator of ChatGPT, massive brand recognition, dominant 62.5% share of the consumer AI tool market, something like 600,000 paying business users now for ChatGPT Enterprise. Their models, like GPT-4o and 4.1, are still industry benchmarks. Now, that deep strategic alignment with Microsoft, it's a massive advantage, provides vast resources, distribution channels.
Access.
Huge access. They just closed a $40 billion funding round, valuing them at $300 billion, projecting maybe $12.7 billion in revenue for 2025. So that close tie-in gives them a direct pipeline to enterprise customers via Microsoft. But it also means their fate is very, very intertwined with the Tier 1 giant. They're even planning this massive $5,100 billion Stargate data center project. Shows they want more control over their own infrastructure, too.
Interesting. Okay, right alongside them, you have Anthropic positioning themselves as a sort of safety-first challenger. How does that focus on AI safety, particularly their constitutional AI idea, differentiate them? Does it give them a business edge?
Anthropic's main differentiator is absolutely its deep focus on AI safety and responsible development. That's embodied in their constitutional AI training method. Essentially, it means they train their models to follow a predefined set of principles, almost like an ethical constitution, to guide their outputs and make them safer and more aligned.
Okay.
And that has resonated really strongly, especially with enterprise customers who are maybe more risk-averse or in regulated industries. It creates a distinct market niche for them. Their Claude family of models are very competitive, showing great performance, particularly in handling long documents and complex reasoning.
And their valuation reflects that.
Absolutely exploded. Went from about $61.5 billion in March 2025 to $183 billion by September after a massive $13 billion Series F round. Their annual revenue run rate apparently increased fivefold in just 8 months, and they have those crucial strategic investments from Amazon and Google, giving them powerful cloud partners and distribution.
Wow. Okay, then there's xAI, Elon Musk's venture. This one feels less about just a single model and more about building an integrated AI ecosystem, right?
Yeah.
Especially given his other companies. What's the play there?
Yeah, xAI's strategy definitely seems to be about building a vertically integrated AI powerhouse, leveraging Musk's existing empire. Their Grok models are kind of positioned as less filtered, maybe more rebellious alternatives, designed to generate content that might push boundaries a bit more.
On brand, perhaps.
Perhaps. A key advantage is definitely the potential for seamless integration with Tesla, and it's already securing some U.S. government contracts. Valuation whispers are around $170, $200 billion. And crucially, they're building their own massive compute infrastructure, a 200,000 GPU Colossus training cluster. That gives them a level of strategic independence few rivals can match, but it also requires just astronomical amounts of capital.
Indeed. Okay, finally in this tier, Mistral AI, the European open weight champion, offering a totally different philosophy. What's the significance of their open weight approach, especially maybe for European companies?
Mistral AI, based in Paris, they focus on powerful open weight models, like their Mistral and Mixtral series. This whole approach emphasizes transparency, security, and data sovereignty. That's really attractive, particularly to European enterprises and governments who might be wary of closed, US-based AI systems.
Control is key.
Exactly. By making the model weights open, developers can inspect them, adapt them, deploy them on their own servers. It fosters a whole ecosystem around their tech. They're reportedly raising $1 billion at a $10 billion valuation, with big names like NVIDIA, Microsoft, and Andreessen Horowitz investing. And crucially, they've signed distribution deals with Microsoft Azure, NVIDIA, and NTT Data, giving them access to potentially 75% of the Fortune Global 100. They're a serious force promoting an alternative to the closed model giants.
Okay, so we've got the infrastructure, we've got the engine room building the core models. What does this all actually mean for day-to-day business? This brings us to Tier 3, where, as they say, the rubber meets the road, where all this theoretical AI power gets translated into tangible business value, solving real problems.
Exactly right. The main battleground here really is enterprise adoption. Success in this tier isn't just about having the biggest or smartest model. It's about achieving that crucial product-market fit, ensuring deep integration into existing workflows, and critically demonstrating clear ROI, return on investment. This tier is where AI's potential actually impacts how companies operate, how they innovate, how they interact with their customers day to day.
Right. And starting with Palantir Technologies, they've carved out a really specific niche. Government, enterprise AI, complex, sensitive environments. What makes them so vital to their clients?
Palantir specializes in, data analytics and AI platforms specifically for those complex, high-stakes environments, government intelligence, defense, large industrial companies. Their main offering, the Artificial Intelligence Platform, or AIP, lets customers securely deploy large language models using their own private data, all within Palantir's controlled ecosystem.
Security is paramount there.
Absolutely. They have a market cap around $378 billion. Their Q2 2025 revenue was over $1 billion, up 48% year over year, driven significantly by a big surge, 68%, in their U.S. commercial business. Their primary moat is just being deeply, deeply entrenched in these critical operations. The sensitive nature of the data and the complexity makes them incredibly sticky.
Makes sense. Then you have Salesforce, the absolute leader in CRM. They seem to be weaving AI into everything to change how businesses manage customer relationships. How exactly does AI boost what they do?
Well, Salesforce, with nearly 24% of the global CRM market, is perfectly placed to inject AI right into the heart of customer interactions. They're doing this through their Einstein AI and now Agentforce platforms, automating tasks across sales, service, marketing. Imagine AI automatically summarizing customer calls, drafting personalized follow-up emails, even predicting what a customer might need next.
That's powerful stuff for sales teams.
Hugely powerful. Their AI annual recurring revenue, ARR, surged 120% to $1.1 billion in 2025. And they say over 60% of their big deals now include an AI component, their moat, that massive, sticky customer base they already have. Plus, strategic partnerships with Google Cloud, AWS, OpenAI, I mean, they can leverage best-in-class tech to deliver these AI features.
Okay, Adobe. They have this near monopoly in creative software. Now they're putting generative AI tools directly into Photoshop, Illustrator, etc. What's their approach to making sure designers and marketers can actually use this AI confidently, especially around copyright?
Adobe's generative AI strategy is really centered on their Firefly models, and the key thing here is that Firefly is trained specifically on commercially safe data. That means creators can use the content generated by Firefly, like extending an image with generative fill in Photoshop without worrying about copyright infringement. That's a huge deal for
A
professionals.
major selling point.
Definitely. These tools are integrated right into their Creative Cloud products. Their market cap is around $147 billion. Subscription revenues grew 11.5% to $5.64 billion in Q2 2025, making up almost all their revenue. And they also benefit more broadly from AI in commerce. For instance, AI-driven referral traffic to retail and travel websites saw massive growth, 1,200% and 1,700% respectively, shows the utility across their ecosystem.
Right. Now, UiPath, they were leaders in robotic process automation, RPA. Now they're talking about shifting to AI-powered automation, even agentic automation. What does that actually mean? What's the vision?
So UiPath is pivoting from just automating simple repetitive tasks, which was RPA, towards this idea of agentic automation.
Yeah.
This means creating AI agents that can not just do a task, but can actually plan and execute multi-step processes autonomously across different applications.
So more like a digital assistant that can handle a whole workflow.
Exactly. Think of an AI agent that could process an entire invoice from receiving it to final payment, interacting with different systems, maybe even communicating with people, all without direct human input at every single step. Their market cap is about $5.9 billion, ARR around $1.69 billion. Their moat is really their leadership in that established RPA market and their large base of blue chip customers who they can now hopefully upgrade to these more advanced AI workflows.
Okay, beyond these big public companies, we're seeing some really interesting private specialists emerge too. You mentioned Perplexity AI earlier, taking on search itself. That's ambitious. How is their answer engine different from, say, Google?
Perplexity AI, valued at around $18 billion now, is a great example of an AI-native approach. Instead of giving you a list of blue links like traditional search,
Right.
Perplexity aims to give you a direct, synthesized answer, complete with citations from real-time web sources. It's about getting straight to the information, verified. It's reportedly hit $80 million in ARR, directly challenging Google search with a fundamentally different user experience. It really highlights how specialized AI applications can kind of unbundle traditional functions and offer maybe a superior AI-first solution.
Fascinating. But look, it can't all be sunshine and trillion-dollar valuations, right? This whole ecosystem, it feels like it's shadowed by some pretty significant risks, complex dynamics. It feels like time to address the AI bubble debate. Is the hype maybe outpacing the reality on the ground?
That is a really important question right now. I mean, on one hand, you see these massive investments, that $44 billion in the first half of 2025 alone. But then you look at studies like a recent MIT report called the Gen AI Divide, and it's pretty sobering. It reveals that an astonishing 95% of business attempts to integrate generative AI are currently failing to deliver meaningful revenue acceleration.
95%. Wow.
95%. Only
Yeah.
5% are actually achieving true success. It highlights this profound implementation gap.
That's staggering. So you've got this incredible optimism, massive investment, OpenAI's CEO talking about trillions for infrastructure, huge long-term payoffs. But then reality check from MIT says only 5% of companies are seeing real revenue benefits yet. What's causing that huge disconnect?
It's a really stark contrast, isn't it? The report suggests a few things. AI agents, for example, are only successfully completing maybe 24% of the real-world office tasks they're assigned. And many IT managers frankly admit they don't have formal AI adoption strategies yet. They cite security concerns, integration challenges as major barriers.
Practical hurdles.
Exactly. It suggests that while the tech's potential is obviously immense, the practical difficulties integrating it into complex business workflows, training people, ensuring data security and privacy, these are proving to be really significant hurdles. And the implication is pretty clear. Those infrastructure players like NVIDIA, they benefit regardless because people are buying the hardware. But the application layer companies, their success really depends on enterprises actually overcoming these implementation challenges.
Right, that makes sense. And this leads directly into that intense cloud AI platform war we talked about, Azure versus GCP versus AWS. Each giant seems to have a slightly different strategy to be the go-to cloud for AI. Can you quickly recap their approaches?
Sure. Microsoft Azure is really pushing an integrated partnership-led strategy, leveraging that exclusive OpenAI relationship, which is clearly driving growth, that 39% Azure jump. Google Cloud, GCP, emphasizes its vertically integrated stack, its own Gemini models, Vertex AI platform, custom TPUs, although it also partners with Anthropic.
Covering the bases.
Yeah. And then Amazon Web Services, AWS, positions itself as that model-agnostic marketplace with Bedrock, offering choice, Anthropic, Mistral, Cohere, plus its own Nova models. They're all battling fiercely to become the default platform where AI development and deployment happens.
And those huge multi-billion-dollar investments we've seen Microsoft and OpenAI, Amazon and Google and Anthropic, they feel almost like quasi-acquisitions, don't they? What's
Yeah.
the strategic play there?
That's a great way to put it. Quasi-acquisitions. They're not just financial investments, they're absolutely strategic. They're designed to secure early access to cutting-edge innovation, yes, but critically also to lock these leading AI startups into their specific cloud ecosystems.
Driving cloud usage.
Exactly. It drives massive cloud consumption for the hyperscalers, often without the intense regulatory scrutiny that a full formal acquisition might attract. That Microsoft deal with Inflection AI is a perfect example, paying $650 million mainly to license models and hire most of the staff. It's a way to absorb the talent and tech without technically buying the company.
Very clever. Okay, we're also seeing this significant challenge emerging from the open source offensive, you called it, led by Meta, Mistral AI. This feels like a direct strategic threat to companies like OpenAI and Anthropic, who rely on their models being proprietary.
It really is a fundamental tension in the market right now. You have OpenAI, Anthropic operating with these closed proprietary models. Their edge is their technological lead, and they charge for access via APIs. Then you have Meta with Llama and Mistral AI, releasing powerful models where the weights, the core intelligence are open.
Free to use, modify.
Potentially, yes, with certain licenses. The strategy aims to commoditize that foundation model layer itself. If powerful models become free and adaptable, it could seriously erode the pricing power of the proprietary ones. And the value might shift elsewhere to the hardware providers or the application developers who build specialized solutions on top of these open models. It's a major strategic move, especially from a tier 1 titan like Meta, trying to reshape the whole competitive field.
Really interesting dynamic. Okay, looking ahead then, beyond these current battles, what are the key trends you see shaping this market? What's next?
Well, there are a few crucial shifts emerging, I think. First is agentic AI. Moving beyond just chatbots or copilots to more proactive AI agents. Agents that can actually plan and execute complex, multi-step tasks across different applications autonomously. Think about UiPath's Vision or Salesforce's Agentforce. This could genuinely disrupt entire software categories by automating much more complex workflows.
Game changer potential there?
Potentially, yes. Second, we're seeing the rise of small language models, or SLMs. These are smaller, highly optimized models, maybe under 10 billion parameters, designed to be more cost-effective, better for privacy, and sometimes capable of running directly on devices like your phone or laptop.
Edge AI.
Exactly. This could lead to more decentralized AI applications away from relying solely on massive cloud data centers. And finally, verticalization. We're seeing more and more value created by fine-tuning models for very specific high-value industries. Think AI for legal research, like Harvey, or AI specialized for enterprise security, like Cohere is focusing on. Deep domain expertise becomes a real competitive advantage that generic one-size-fits-all models just can't match.
Okay, so wrapping this up, what have we learned from this deep dive into the generative AI landscape? Feels like a story of immense scale, but also fascinating contradictions. You've got consolidation down at the infrastructure level, but fragmentation and fierce competition higher up with the models.
Yeah.
Massive investment happening alongside these really widespread implementation problems, and proprietary power constantly being challenged by this rising open source tide.
That sums it up well. Ultimately, I think navigating this market successfully requires really understanding these distinct tiers, the infrastructure, the models, the applications, and how they all connect and influence each other. The companies that will truly thrive, in my view, are those that can effectively blend that cutting-edge technological innovation with smart strategic partnerships and maintain a relentless focus on solving actual, tangible customer problems, demonstrating that ROI. The initial, maybe slightly breathless hype is definitely giving way to a more sober assessment of the challenges. And the next few years will really reveal the true winners, the ones who can actually bridge that critical implementation gap we talked about.
So a final thought for you, our listener, as you consider this landscape. If 95% of enterprise AI integrations are currently failing to deliver meaningful revenue, think about this. What specific high-value problem in your world, or maybe your industry, could genuinely benefit from AI? And how would you measure its success beyond just the buzzwords? What problem is so compelling that it justifies the significant effort needed to make AI work? And how would you really know that it's truly delivering value?